What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. Today, I want to talk a little bit more about the arrived home secondary market that I think, I know is coming out based on their website now, but that I talked about a little bit yesterday. I'm going to share the details that I have found. You probably already saw this if you own arrived homes already. The way I found out about it is people let me know through the Discord because they had gotten emails about it or got some direct messages and whatnot too. Um, just saying that, oh, they had gotten a message that said there was going to be secondary trading. I did a little video yesterday about, where I think there might be some opportunity in that, but I had, really more questions than answers. Someone today pointed me to the Arrived Homes blog, which I didn't, I hadn't seen this before that, and it answered some of the questions. And it actually, I'm pretty excited about what they're doing, and I want to show you. I dug into some properties, and I think if it goes the way that it appears that it's going to, that there should be some real opportunities, and I'll explain why. Before I forget, please like and subscribe. Uh, I have links in the description below to any of the other sites that I invest on if I happen to mention them. Or even if I don't, I just always copy and paste the same group of links down there. So they don't, if it doesn't seem to make sense, then and that's why. But all the usual other ones that I invest on. Um, and there's also a Discord link to if you want to just jump in and talk fractional real estate investing with a group of us. Some are invested on Arrived Homes. Most of us are on Lofty, Mogul, Ground Floor, some other sites as well. Some collab investors, but just it's a not affiliated with any other site. Just one that I put together to get people that find me through here and want to talk fractional real estate investing. All right, back to what we're talking about today. So this gets into a little bit about how it's actually going to work. So what's the secondary market? If you missed yesterday's video, so up until recently, you could only buy properties on Arrived Homes in their IPOs, right? They sell them out, and then once they're fully sold out, they just leave them. They're all still on their pages, but they just are listed as funded. Um, and those people who bought those properties or shares in those properties are stuck holding them until the property's sold sometime in the future. And I don't know if they've had any that have actually sold yet. And so people have been locked in there, some of them for, 2 or 3 years at this point. Um, so what Arrived is doing and what a couple other platforms have done is they're going to make it so that people that own these shares can sell them on what they're calling their secondary market. They're doing a couple things that's pretty weird. Uh, so the market is only going to be open 1 week each quarter. So there'll be 4 weeks a year, 1 week each quarter that we'll be able to go in. This was the big thing I wasn't sure about how they were setting prices. And they're saying investors can just set limit orders. And they have a well, I don't know if it'll actually look like this, but this looks a lot like the order book on Lofty, or a little bit like it looks on Arc 7. More like Lofties though, right? Where you have people that have put what their sell orders are and what the amounts are, and people can put in what their buy orders are. And if any of them happen to match up, then that transaction will go through, or you can see them, and put an order hoping to specifically match up with that. That's fantastic news because that means, um, you know, uh, presumably this is going to be a thin market initially. There's not going to be a whole bunch of us that are sitting here waiting to jump in. Although I have talked to a couple of people already that are going to, so I guess that's yet to be seen. But I think there's going to be a lot of people that want to sell because they bought a property 2 or 3 years ago. They thought they were going to get paid 4%. Maybe they're getting paid 2 or 1, or maybe they're not getting paid anything right now. And they want to liquidate, and Arrived is going to provides an estimate of the value of that share. But as we can see, they're going to be allowed to put whatever price they want. And so my thought is I'm going to identify several properties that I want to own, but that I expect to, that a lot of people will want to get out of. And whether I'm right or not about that, is yet to be seen. and then I'll just put orders in at a price that I'm really happy buying it at. And I think there's a good chance that there'll be very few orders on the buy side, and you'll have a lot of people trying to get out. That's my thought. I don't know if that's really what's going to happen, but that's why I see some opportunity here. And so, um, and they say it'll be just connected to your bank account. One of the things that I'm curious, some of the platforms make you have cash in your account for every limit order that you put in. And not just everyone that's filled, but everyone that's actually put in, and that's just annoying. So hopefully they don't do that. Um, that's one of the things that's yet to be seen. So that's why I think there is an opportunity, right? I think there's going to be a lot of people that are going to try want to cash out for one reason or another. They might have put this money in there thinking that they were going to leave it in there long term, but they could use the money today, or it just hasn't worked as well as they thought, and so they just want to pull it out and put it somewhere else. And so that's got me digging around into properties. And I just going to walk you through a little bit about my thought process here. I think that I think there's going to be two types of opportunities. There's going to be properties that haven't performed very well at all. Um, the A lot of these I think will be the vacation rentals, um, and especially so some of the older ones like um, and this is one that I took a little bit of a deep dive into today, and I'm going to share some numbers about it. So this property was bought and listed on Arrived in 2022. Expected date of it being up and running was going to be October. I didn't find the exact sale date that it was initially bought, but it was earlier in the year. Not a really great time to be buying properties. I think uh, sometime April or May of 2022 is when a lot of markets peaked, and so and at least a lot of them dipped after that. Some of them just sort of stayed flat. I didn't do I'm not doing a full due diligence on this property today, so you'd want to dig into the market and everything. I just am trying to show some of the numbers, the way I'm trying to look at these, and then why I think possibly there's some opportunities. But so this is one of the things when you click on their performance tab and look at their full property timeline, you can see what what they think their share price is. So this is one they're saying it's $6.18. If you're not familiar with Arrived, when they IPO something, all of them, at least all that I've looked at, are IPOing at $10 per share. And so they're saying this is almost a 40% discount, right? 38.2% discount or something to what they are IPO'd it at. If you look at the dividend history, dividends paused. Okay, they just started accepting live bookings. This is November of 24. But this wasn't the first time they actually had they switched managers. And so you can go back and you can see some notes on here, see what the dividend yield was. But obviously, I think one their suggested share price is really low. But if you think about somebody who's holding on to this and thought they were buying an income producing share, they're probably not very happy with this, and so maybe you get it for this price or maybe less, right? But I want to dig into that number a little bit though, and I did some math on this, which is always a lot of fun. So when they bought this property, I just pulled all of this information from these tabs that they and some from the SEC filings. And so, I'm just taking everything at face value. If I tell you it was a certain price, it's because that's the price they put on here, not necessarily that I did any independent research. So, but I wanted to show you a couple of things. Man, why am I? Okay, here we go. So 975, that with a 50% financing, so a loan of 487,500. One of the things that I thought was kind of interesting about this is it ended up being so in the SEC filing, it showed that they were planning to borrow 409. So they borrowed less or they borrowed more. Um, and they also raised less than what the total amount that they could raise was, right? They could raise up to 814. But what they ended up raising was 733,000. But one of the things I wanted to show you here, uh, so okay, purchase price 975,000, loan for half of that. So that means, at purchase you expect to have equity of about 487,500. But they raised 733,000, right? So that's an extra 246,000. Um, and this is 100% transparent, what they're doing. But so these are all the other expenses that went into that, right? So a certain portion, and this is that they put out before. So I think that this should actually ended up only being 487,500 that went towards the property acquisition, because then they used the loan for the other part. Um, but so a lot of that, and I went into this yesterday, a lot of that money is just fees, but they have two line items that maybe we should add back into the value, and so I wanted to pull those out. They had property improvements 72,000, and then reserves 58,500. They call those operating and capital reserves. Um, if those still exist today, in my mind, I would pay for those, right? That's cash that's in the entity. I'd want to add it to the current property price. Um, but so, if you divide what they raised back then by the total shares outstanding, that was $10 a share, right? And yeah, this might be a little confusing, but I think we'll get there if you follow me. And so then the next thing I did is, okay, what's the current value of this property, right? Because we're trying to figure out, is this going to make sense at the price that they think? So I looked it up on Zillow. They say 877, 700. Actually, that is one of the better numbers. It might be as low as 814. That's what Realtor said. Um, before I put money into this, I'd want to do a much deeper dive. I'm trying to just show you what I think I want to think about when I'm looking at these. I'll start to really dig into individual properties as we get closer, and I get some questions answered as far as um, I don't want to waste a ton of time digging into these properties if that secondary market isn't going to really work the way I want it to, or the way I think it's going to. Because it does, based on how they describe it, it seems like there should be some real opportunities. Um, and I am going to explain too. It's like, well, why am I buying this if it's not performing? I'm going to get into that as well. Um, but so okay, so we take today's price, right, and where I'm using Zillow. It's a little bit more generous, but I'm just doing it to do the math. Still the same loan amount, because when we looked in that SEC filing, it says that it's interest only, meaning that they didn't pay down any debt. And so that would mean there's about $390,000 in equity, assuming those two things are right, right? And then we divide that 390,000 by the total shares outstanding, and that means you've got about $5.32 in equity per share, if what we're assuming here is right. Um, Now, obviously, oop, go back to this performance. That's lower than the 618. And one of the things that they mentioned is they're only going to, not every single property is going to be on the secondary market, only ones that have had at least one share price update. So they're basically going to have put out, okay, this is what we think it's worth. Okay, guys, go ahead and trade. And so that's going to create some pressure to be somewhere around this. But remember, this might be somebody who just wants to get rid of it, and there hopefully won't be a lot of competing buyers, right? And so um, maybe what I really want to pay is 532. But then, okay, it is an operating Airbnb. This is the new manager. They've only been in place, I think, since November. They have all positive reviews, although only five. The more I dig into this, I'm going to look into the bookings and see how it's going. I think that we'll probably have a few more dividends before this goes live, so I think it might give us a better idea of where that is. Um, but so I think some of this $72,000 in improvements probably went into the furniture and the fixtures, the equipment, all the beds, all that sort of thing. That you have to have an operating Airbnb. Now, a lot of that stuff is depreciating assets, right? Like, you're not going to sell these bunk beds for what they paid for them. The same thing for, every single piece of equipment in here, and some of it's going to have to be replaced over time. But I don't think that that is worth nothing today, right? And so 72,000 for a property this size, especially if you're paying a third party designer to do it, is not beyond the realm of possibility that that's what they actually spent most of that on. I couldn't find an actual breakdown of what they did. And so that's what I'm assuming. So even though the property itself might only be worth this, if I were going to buy it and turn it into a short term rental today, I'd have to spend something to get it up and running. And maybe it's not this whole amount, but maybe, so that's why one of the things I did is look at, okay, what is that improvement per share? So this 98 cents is just the 72,000 divided by the outstanding shares. So if I added this 92 cents to the equity per share just from the real estate value, that already gets us above this 618 number. So already just with those two numbers together, right, that gets you to $6.30 without thinking about anything else. Maybe this 618 is less than if I bought this property and got it up and running. Um, And then, okay, also one of the line items was reserves, right? They had 58,500 in reserves. Well, if that full amount were still in reserves, that'd be worth another 80 bucks or 80 cents per share. I'm going to show you though where we can look up at least where it was at some point in time. Let's jump into that now. And so this is one of the things. This is going to be a little bit different from, when we're trading on, for example, on Lofty, which I spend a lot of time on this channel trading on there. If we have questions about the property, there's several ways we can go about getting that answered, right? We might go in the Discord, we might go into the documents provided, we might actually just ask Lofty team members to ask the property manager. And so there's a lot of ways that we can get some of this additional information. As far as I can tell, there's not any real system for that here. So if they haven't given us anything, the only thing we're going to be able to do is to look in the SEC file documents. I don't know that for sure. I mean, you can try to reach out to Arrived and see if they'll give you additional information. But I think probably because they're making public filings, I don't think they're going to give us additional information beyond what's publicly available. I don't know that for sure, but that would be something to look into. But so if you go in there, the SEC's Edgar search, and I just search for the Arrived Homes STR LLC. This is the one that this particular one. Um, I figured that out by opening the Arrive series for this, and where there was a link on the page, and then looking at what it was called. That document was called. All of these are the dividends that are put out at different points in time. I think whenever they have these current reports. And now I opened something. Let's see. Is this? Oh no, this one's different. Um, that's a letter, so close that. But all the other ones I opened. So, and this is one of the things too, is like you're going to want to look at. Okay, so this is the dividend amount per share for all these different ones. You'll notice Oasis doesn't show up. That's what this one particular one's called. But if we go back to here, you can get this is the 6 month, the semi-annual report. And so I have that doc opened. And you can actually, it's a dense document. You really should look at all of it if you're thinking about buying, investing into any of these properties. Again, just because I'm excited about this opportunity and I might buy some of these doesn't mean that it's the right answer for you. You want to do all your own due diligence. I'm just showing you the process I'm going through, trying to explain why it seems like this could create a good opportunity, why I think that. But again, you want to make sure. Um, that you have that you've dug into this on your own, that it's the right financial decision for yourself. Just same disclaimer as always, right? I mean, I'm not trying to tell you what to buy, or even recommend certain things. You're just I'm just showing you how I'm thinking about this, and some of the ways I've figured out to find some of the details, because it is just it's a really different idea. And all the platforms work a little bit differently, and some of the things we have to think about, I think, are different from one property type to the next and whatnot. But so okay, I looked around, found where the balance sheets are. So this is showing what they have for cash on hand. So okay, they've only got $6,000 in cash on hand. I think this is all that's left of um, that original 50 58,000 reserve. So we're definitely not giving them that 80 cents credit, right? I'm not going to do that. They do have some prepaid expenses and money listed as due from the property manager. So I think that, those are actual assets, but then you have to look, okay, accrued expenses. I have no idea what this is, right? Maybe we can figure that out. Maybe we can't by looking at this deeper. Excuse me. The thing I was really trying to see is how much cash they're having, because you can see, excuse me, some of these entities are holding a lot, right? And so each one of these represents a different property on there. And so we've been, I was showing you Oasis has very little cash balance relative to some of these others. And so that's going to be something that each time I'm looking at a property and looking at the price, I'm also going to want to see what their balance sheet looks like. And then you can also in this one you can see let's see, these are their balance sheets. And you actually want to look at the date too, right? Because this is as of December. I thought that they had them. Yeah, you can actually have these are more updated ones as of June. So actually, it had a little bit more cash on hand at that time. Other receive or prepaid expenses as well, due from the manager, and then so it looks like it was actually doing a little bit better at this. So this is the June. This is the most recent update that I've seen. I think prior to that secondary market going live, we should get the 2024 full year, I think. And so we'll be able to look at that, and that'll help. It'll also give us a more accurate, it'll give us the balance sheet at that time, but also this income statement that we're about to look at for the whole year instead of just this is the comprehensive income, but this is just for the 6 months ended this time. So we can actually dig into this, look at, okay, some of the, there's a lot of, there's depreciation. So we know that expense is sort of, a lot of people refer to that as like a phantom expense, right? But it goes into the math. But I mean, this property operated as a loss at a loss during that time, even if you added back the depreciation, right? And so, um, but this is where I think that we're going to have to go to get the property level details about things. That we can go there. We can go to the Airbnb listing, all the other due diligence tools that we can use on a specific asset, right? But I think that, figuring out what it's worth today, and then getting to look at, okay, does the entity hold any cash? Let's adjust for that. And then also being able to see, has it been paying out a dividend? Okay, it hasn't. This particular one hasn't. But is it accruing cash? Well, we don't know, because the new manager just took over. I really hope on the next update that maybe we'll be able to see that. And it'll be interesting to see when they open those week-long trading windows, right? Like ideally, it'll be after they put out the annual report, after they put out the semi-annual report, like once we have the most data, like hopefully they're not doing it just prior to those, right? But I think we'll be able to do that. It'll give us some info. And then, but why are we doing this? Why are we going to buy ones that are not working, right? And this particular one, I'm not saying this is the deal I'm going to buy, but this is where I'm going to start. And the reason I say that is because on Lofty, which is the platform that has, really the most developed secondary market right now, almost all of the best deals that I've found personally are properties that were not performing, and because of that, we've been able to buy at a significant discount. And so, yeah, I'm not going to do this math and figure out that I think the property and the cash together are worth $6.30 and pay that, right? I'm going to say, okay, now I want some discount to that so that I know I'm making a profit immediately. And what that discount is, I don't know. I mean, if I think that it is, if I think the operations are turning around and are looking better, um, it'll be a much smaller discount than what I expect if I think that it is going to either just continually perform poorly, or if I think it's gonna uh, like the only way to ever make money on it is when it sells, well, then I'm going to want a really steep discount, right? That's one more thing I wanted to point out about this particular one, and I think we're going to have to look at it for a lot of them, is they have an interest only loan. That the interest only period is only 7 years. And so, we'll have to go back and look at, all right, from around August of 2022. So we have until sometime mid 2029 before we're going to have some sort of adjustment. And then if it's not making money now, then it really won't be making money. So that'll be something that we'll have to think about. Um, but what I think that the biggest opportunity that happens with trading on Lofty is where there's people that are just sick of being stuck on a property that's not giving them any money, and they're willing to sell out significantly below the actual value of the property. And I expect to see some of that here. That's one of the main opportunities I think we'll see. I think there's going to be another one on Arrive though that we don't really see so much on Lofty, and that is going to be um, some of the early. Probably not the vacation rentals because and I don't know this for sure. I mean, we're just gonna have to look through a lot of them. But when I look at a lot of the vacation rentals, it seems like so they bought in all of, the heard them referred to as like the meme markets or the bubble markets. They have Pigeon Forge and the Poconos and Joshua Tree and just all the places that different online personalities hyped, and some of them I think did perfectly fine, and some of them just got really oversaturated, and so some of those markets are really struggling. Overall, I haven't been super impressed with how Arrived has picked properties, and so I would guess that you might not see what I'm about to show you with a lot of the short-term rentals, but maybe you will with these. So, for example, and I don't know, but this is another place where I see the potential for some. So this one actually, okay, they think that it's more than doubled in value. This is one of the first ones that I've seen it that high. So this is probably a terrible example. Let's go back. Is this a levered one? That's interesting. I thought this was the one I had looked at, but okay, yeah, because which makes some sense because it's levered and because of the time period that this was bought. So and this is actually though what I want to show you. It works with this one too. So let's see. When did this one get sold and when 2010. Well, let's pull it up. Oh, that's aggravating. I know that I usually can see it and I'm just missing it because I'm trying to think. So let's look at the offering circular, risk factors, half year, property financials, full year, half year. I think it might be in here. Oh, okay. So I broke the computer. Nope. Okay, good. Well, I don't have to find the exact date right now because I don't want to waste your time watching me fumble through this. But let me just sort of walk you through my thought process. A lot of these older ones were bought prior to that 2022 time period where think is the peak in a lot of markets. And so if they were bought in, say, 2020, I don't know, maybe 2021 is the first year um, that they were selling these. But regardless, there was just an incredible amount of appreciation in a short period of time. And so a lot of these, they are saying, okay, we think this appreciated, right? Okay, this is another one. I guess I wasn't looking at ones that were this far back, but they're saying, okay, we think it appreciated a significant amount. The reason they think the share doubled is because these are levered properties, and so your property price doesn't have to double if you have 40% loan or 60% loan to value, 40% equity, and your property goes up 40%, well, then you've doubled your equity, right? And so some of these older properties that, and I know it's not that old, but that were 3 or 4 years ago, I think there's the potential that they had incredible appreciation. And so even though this price looks like it's a big premium from from, what the person who bought it paid, I still think this could potentially be a discount to the real world value if they've just gotten it wrong, right? Like, and I think that this is it's kind of funny that the ones I'm pulling up now are saying they doubled, because when I was looking at a lot that looked like they were just like at like $15, but I guess maybe I just didn't go so far back or something. Um, let's just pull another one. I'm gonna be more prepared for with a specific property next time I have an idea like this. I'm sorry about that. But so let's look at the performance on this one. Okay, so this is actually a discount, right? So that's a terrible example again. But so anyway, that's the idea, that there's some that were bought prior to that big run up in values that, arrived, thinks, okay, maybe it's appreciated X, and really it's appreciated X plus some percent. And so those are going to be ones that I think you might be able to snag a good deal on. So, for example, let's say the share price is showing up as $20. There's somebody who, everybody who owns that bought it at 10. There's a bunch of people that want to get out because they've had their money locked up for 3 or 4 years. And there's not a whole bunch of people that are excited to jump in and buy what looks like a premium price, right? Like, because we know that they bought it for 10, right? And in that scenario, if I think it really did, if I believe the $20, or I think maybe it was 22 or 23, after I do my math, um, I still might be able to find somebody who's willing to sell that at 16, 17, or 18, because it's still a nice profit for them, right? And because it's a thin market, there might not be buyers that are out there for the full premium. And so I think that there's going to be deals to be had on both ends of that spectrum, right? I think there's going to be the non-performing properties that you're just going to get a really good discount from the real world value, and the ones that have performed well, and you're just going to get a discount because of the share price, because of the way that interacts with what those people, what they invested in, and how I believe there will just be a lack of liquidity on those ones. I can't imagine that there's a whole bunch of people that are thinking, hey, let me jump in here and buy for $20 what somebody paid 10 for. Um, I realize that's not like the way you should be thinking about real estate, right? Because you're buying a share in a property. And so ideally we'd be doing math, and I think that will be what I'll be doing, right? Is actually looking at the property, trying to figure out what it's worth, figuring out what I really think the shares are worth, and then because I want a great deal, uh, finding the opportunities to get a big discount to that value that I think it is. Um, but my experience so far on Lofty and a couple other sites where there's people that buy and sell stuff, they're just not. I find that most of the investors on these platforms are not thinking about these deals in those terms, and so that's why I'm spending a lot of time on here, because I think that there is the opportunity to get have basically a little bit of arbitrage between what the share sells for versus what the real world value of that asset is. Now, unlike Lofty, we can't then put together a vote and sell this and realize that value in real life anytime soon, right? They all have a specific holding period. And so I'm going to want a deal that's just so good that I don't mind holding it until whenever the end of that period is, right? And so, but I think that there should be plenty of those types of deals. um, I haven't taken a very measured approach. So one of the things, if you guys want to think about this and work on this a little bit together, one of the things that we should think about is, okay, you've got like 300 properties to deal with. How are we attacking this, right? Is there, like my specific strategies, I'm going to look at the short-term rentals first, because I think those tend to be the most cyclical income, right? They'll have the most um, your or most seasonal income, right? You're more likely that there's going to be certain unhappy people because they had, no dividends at certain points in time. Um, but if I believe that it is, working properly now, that I think I'll get into that. And then, um, I think it's going to be a matter of just sort of brute force going through every single property or as many as I can and seeing what is that what does that share price look like? What is the real world value? Maybe just looking at those two things first, and then from that figuring out where do I think the most likely opportunities are and digging in. But then one other way that I can imagine looking at this is just picking markets where I don't have great exposure in yet. You know, they do have a lot of good markets. We looked at that map yesterday. They've got properties in a lot of different places that I don't own properties. And so maybe maybe start looking at that a little bit too. I mean, I don't know. I've been trying to get properties in Atlanta. I still don't have any because I took my money off Atlanta. Denver. Yeah, there's just a lot of these different markets that would be good to add some geographic diversification, and so maybe those would be a good place to start. Because one of the things I'm certainly not going to go through and do the math on every single property before the first week that they open that trading window, because where they're only doing 1 week at a time, 4 weeks a year. I want to make sure that there's some real opportunity that first time. I think it's very possible that that is going to be the week, the time that there's the most opportunity because you have all this pent up selling demand, people that have just wanted to cash out and couldn't for a long time. I think that's possible, but I also think the second one might be better. I think the reason that that's potential is that people the first time think, oh, I'm just going to get whatever Arrive tells me it's worth, and then they hold out for that the whole week, and then they don't get it, and then they have to sit there for a whole quarter, hold on to it, and be like, man, I wish I had just taken an offer on that and sold it cheaper. I mean, those are a couple of scenarios I could picture. I'm never trying to predict the future, right? But I don't want to uh, do a whole bunch of work in case we have that first scenario, right? Like, and if I end up doing only identifying 10 properties that I'm interested in and I don't get a piece of any of them, well, it's not the end of the world, right? I mean, there's lots of other opportunities. But I think that's, I'm gonna have to think about that a little bit more. If you have other ideas on, how you're gonna approach this, if there's certain markets you're thinking about jumping into, if you want to, share some data that we dig into, split these up, and several of us in the Discord just take our market and come back and share data. I think that'd be a cool way to go about it. I don't think that we all will always have the same, you know, buy decision on each one, but I think at least as far as I can tell, um, it's gonna be like a hassle, like click open this, look at that. Some of the stuff is all, you'll see a bunch of them in SEC filings, but they're not all in each one, right? Like, so this one that I had pulled up earlier, um, this only covers like 20 or 30 properties or something like that. It doesn't have, I don't believe that, yeah, this is all the series I think that this covers. And so there are, you know, I don't know. I don't know if there's an easy way to do it. I'm sure there's one of you guys that is a little bit more tech savvy, could probably scrape all the info from there, from there. I don't know. Maybe that's possible. Um, I'm not sure. I don't know. Anyway, that's the stuff that I'm interested in talking about with you guys. If anybody has any thoughts on that, and then obviously I'm excited. I think this is going to be an opportunity. I think it's one we're going to have to wait a little bit to see how it goes. But that secondary market trading to me has been much better than buying anything on IPOs on properties so far. And it is really just because they're thin markets and people just, there's people that want to liquidate positions and not so many people that want to buy in. Now, maybe that's not going to be the case here. It'll really depend on how well they advertise this, right? Like, I mean, I did hear about this from a bunch of different people in the Discord, so maybe they're doing a good job letting investors know, hey, you're going to be able to buy into these. Anyway, that's enough rambling about this for today. Until next time, I'm going to keep making mistakes so that you don't have to.